Good morning, traders. It is Thursday, December 4th, 2014, 8:02 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. You might hear noise in the background. I have the ECB conference running. I need to stay on top of what is being said, so I apologize if it seems like it's noisy, but I need to keep that on. Let's go over the news as usual. Real quick, fair amount that's occurred overnight. Shanghai's composite surges over 4% on fresh rate cut speculation after the Bank of China halted open market operations. And it injected liquidity for the third straight week. I didn't see anything on this except for one news source. It kind of amazes me that that's the case. I would think that that's a very important thing to report on. Next item, Draghi, after coming out with, after the ECB came out with its 7-day refinancing rate at 0.5 and the deposit rate at negative 0.2, Draghi's seen as keeping the door open for a widening of the asset purchase program. And during the conference just now, he came out and said that they had started on that process. Very large swings in the euro and the DAX. The DAX had a very big spike up to 10,127. That's basically almost exactly 100 points up to new all-time highs. And then now it's trading approximately 150 points below that point where the ECB announcement has been made. So it looks like we've covered about 250 points of range, 250 points of range. Remember, each point is worth 25 euros, and they're very, very large, very volatile movement. The euro, which poked through 123, 123 even this morning, it broke through to 122.77 on the ECB announcement, and now has gained, since the low, has gained about 100 and it looks like 170 ticks or pips on the upside, and is trading in the range of last Tuesday, holding last Tuesday's numbers pretty well. Very volatile. This is what's expected with the ECB announcement, and we have it. France's Q3 ILO unemployment rate 10.4 versus 10.3. Euro hits fresh 27-month low, as I said, 123. The U.S. dollar Japanese pair, fresh 7-year highs. The U.S. dollar yen pair pushed right up to 119.99, but could not break the 120 handle. Really interesting movement there, and has come off since. A reminder that yesterday's Fed Plosser said that global slowdown is not having a material impact on the U.S. economy. We saw the market take a bid right after that comment and continue to push up close to the end of the day. Bank of England also came out this morning, leaving interest rates unchanged at 0.5. The asset purchase target at 375 billion pounds still. And then initial jobless claims came in at 297,000 versus 295,000. Initial jobless claims now has missed by a little bit every week for the last 3 weeks or so. Continuing claims 2.362 million versus 2.32 million, also higher than expected. Looking ahead, we don't have very much today on deck. We have natural gas. We have EIA natural gas at 9:30. And then the Treasury is going to announce the size of the upcoming 3 10-year and 30-year bonds at 10 o'clock if you're trading the curve or Treasuries. We expect at 10:30 ECB's Neu to comment in Berlin. At 11 o'clock, we expect Bank of England's Bailey. At 11:30, we expect Fed's Brainard on financial stability in Washington. And that's it for today. So there's a fair number of speakers from 10:30 Central through to 11:30. Would need to keep an eye on that. Hopefully you have a news feed that you can follow. Let's look at our what our markets have done. Let's go to the technical picture here. So real quick, a recap of yesterday. If you recall, yesterday we came in with the expectation that we're likely to continue to push higher. The primary hypo was for a test of 2072 and a strong potential for new highs, if you recall. As always, this is not a hindsight 2020 exercise in these trader bites. You have the videos on YouTube. You can always go back and watch them. They all happen pre-market, and all we're doing here is recapping what actually happened versus our expectations. The goal here is not to pat myself on the back. The goal is to learn how the hypos worked or didn't work, and how the market's reacting according to versus our expectations for what's likely to happen. So that's the purpose of the recap. You can see here we open right at the 2067. Remember, 2067 has been key. It's the point of control up here, the micro composite point of control, this thick black line. We're opened right at it. A quick responsive test back into yesterday's range or Tuesday's range to find buyers, and then from there, very strong buying interest here. This looks like an open test drive. It opened right on the edge of the prior day's range, tested the prior day's value area, and then there's a drive right there, strong drive right there. Pretty deep pullback, but overall the market kept true to what was expected, which is to push to 2072. You can see the 2072 was hit to the tick here, pushed by a tick, rotate down 2 points, and then battled here before failing all the way down back to the mid. Again, that dark blue line is the midpoint of the session and a key yardstick for me. And then as we pull back to the mid, we start to we shift the point of control around here. We start to build a lot of volume, and then that volume resolves itself to the upside. We did have range extension up. We broke the initial balance high. The initial balance is the high of the first hour, the high and low of the first hour, and we did break it on the upside. We ended up pushing new highs. So as you can see here, prior high 73.25 put in on this day, and we pushed new highs up to 76. 77.50, as I'd indicated yesterday, was a measured move high, and we just came up short of that by about 1.5 points or 6 ticks. Still some room on the upside. So yesterday, Hypo 1 was worked out basically almost perfectly, and then the market sold off on the close. Pretty pretty light selling really on the delta, but on price it shows a pretty decent pullback. It basically pulled back to the midpoint of this swing from 67.75 to 76. On the overnight, since yesterday, opened very tight range, 75.25, 71.25 for the night, just 4 points in anticipation of ECB. And you could see here the ECB announcement kicking in and pushing. Initially it pushed a lower to 69, which puts us right at the point of control of yesterday, and it actually pushed the overnight range below yesterday's low, which brings in the idea and changes slightly what I had set up for our hypos for today, for hypothetical ideas for today, to something that is more neutral rather than bullish. Yesterday, I was my hypothesis coming in before the ECB was a retest of the point of control. I expected 67 to hold, and then for the market to start walking its way back up towards 77.50. But now we've tested the high of yesterday overnight and broke the low of yesterday, and we're in the middle. The point of control overnight is still above us, so most of the volume that has taken place is above, and we are right at the midpoint of the overnight session. So I would caution you, if you're trading between now and the open, I expect the market to rebalance or adjust on the open, and to for participants to position themselves for the open. So I'm going to wait today on Hypo 1. I'm going to wait to see what happens. If you look at what's happened overseas, here's a DAX chart. Here's the DAX chart. This is a 15-minute DAX chart. Very quiet session overnight, 81.50 to 38. Pretty decent range, but about 50 points. But the announcement came in at about 10,028 or so, 10,029, and it spiked up to 10,127 on the DAX, put in new high, very low volume. When we zoom in here, you can see that it was just really difficult to get a fill anywhere in here. Really, it's just a massive stop run, and then immediately took it right back to where it came from, and then extended that range downwards by about 100 points, and then it continued to push downwards again for another 50 points or so, for a total of 250 points over the last half hour. Very, very large range. If you look at the 1 minute chart, you can see the kind of action that's in there. Really volatile trade. I do not recommend trading this product unless you really know what you're doing and have good risk control and a substantial amount of capital in your trading account. This product has a $19,000 per contract margin requirement, so it's not for the faint of heart. You need to have your game plan on to really trade this. You cannot sit and wait for the market to come back when positions don't work. This is my favorite product, and it's the product that I've traded the most volume in my career. But caution, it's just a demonstration of how volatile that ECB announcement is. Here again in the euro, you could see that just sitting sideways pretty much all morning. Yesterday, after dropping, it tested 123 even, stopped at 123.02, and it just sat sideways. And then you could see how volatile it became on the ECB announcement. So to me, the ECB announcements is equivalent to the Fed, is as important to the Fed. It's an opportunity for volatility and for the market to take direction, for money to shift hands. So I pay attention. Anyway, this morning we have right now we have the market trading at 2070, which is basically the point of control from yesterday's. You can see here the bright pink line, or fuchsia, or whatever that is, trading right there, right in yesterday's balance. I believe there's going to be a fair amount of resistance going up to 2072. If we break the 2072, we're looking at new highs to 2077.50. However, I cannot handicap with confidence which direction the market's likely to go in on the open. On one hand, the fact that the ECB has initiated its asset-backed program, it's a good thing. It'll help provide liquidity to that market and give the market a boost. However, the configuration we have here leads me to believe that there's also a possibility that we would run into resistance in the 2072 area and then test lower before we move up. Overall, the market's in an uptrend. You can see here we're one time framing up, meaning we're putting in higher lows consistently. So the intermediate term is long or bullish. The long term, as you already know, is also bullish. These are uh, day session only bars going way back to 10/9/2013, and the overall trend is bullish on the long-term player as well. So you know, the expectation here is for the market to be very noisy on the open. I don't see any numbers coming out on the open, so the market's free to move under its own power. I expect a quick test lower potentially, and then for it to start drifting up, and then I want to see the reaction of 2072. If 2072 is taken out, I expect new highs today. I want to remind you that tomorrow is non-farm payroll, which is the second most important number currently in the U.S. So the markets may not take a strong position, a directional position today. Might go into a holding pattern either early or quite early in the session today, meaning you know, an hour in or so, you might notice that the higher time frames are stepping away from the market while the day traders are in there, which means chop until the close. So use caution today, save your bullets for tomorrow. Good luck, and I'll catch you next time. Take care.